What if I told you the world's most powerful financial institutions are all bracing for the same storm, and it's happening right in front of our eyes? Behind closed doors, the world's central banks are executing a massive strategic pivot. They are dumping the US dollar and buying physical gold at a rate not seen in modern history. So what about the 98%? Is that literal? It points to a stunning global consensus. A recent World Gold Council survey found that while many central banks are buying gold, an overwhelming 95% expect their peers to do the same. This isn't a guess, it's a powerful, shared belief that the financial ground is shifting.
They aren't doing this because the global economy is strong. They're doing it because they see cracks forming in the very foundation of a system built on paper currencies. In this video, we'll expose why the world's smart money is running to gold. We will break down the hard data, the fears driving this global pivot, and what it signals for your financial security. By the end, you will understand the playbook they are using to protect themselves. To understand the scale of this, you have to look at the numbers. This isn't just a trend, it's a structural break from the past 50 years. For 15 straight years, central banks have been net buyers of gold. But the last few years have been a radical acceleration. After averaging around 473 tons of net purchases annually between 2010 and 2021, the floodgates opened. In 2022, they bought a staggering 1,082 tons. They followed that by acquiring another 1,137 tons in 2023 and 1,045 tons in 2024. Even as gold prices hit new highs in 2025, they continued to buy a historically high 863 tons. These aren't paper assets. This is the deliberate acquisition of a physical, non-sovereign asset, and it reflects a profound crisis of trust. But here's where the story gets darker. Much of this buying is happening in the shadows. According to the World Gold Council, these unreported or ghost purchases make up a massive portion of the total. Think of it like an iceberg. The officially reported buying is just the tip. When the most informed financial institutions on the planet move this quietly, it's a signal you can't afford to ignore. So who are the big players? The movement is led by emerging economies. The People's Bank of China has reported buying gold for over 17 consecutive months. Poland has been aggressively boosting its reserves for what it explicitly calls national security reasons. We see similar patterns in India, Singapore, Turkey, and many other nations. This isn't just a few countries hedging their bets, it's a coordinated global response to the same undeniable risks. This brings us to the most important question. Why now? To understand the why, you have to see it as three powerful forces converging at once: a deep-seated fear of currency devaluation, a seismic shift in geopolitics, and quiet preparation for a new financial reality. For 80 years, the US dollar has been the world's financial operating system. This gave America an exorbitant privilege. It could print money to pay its bills because the world needed dollars. But that privilege has been stretched to its breaking point. The core problem is the US national debt. As of April 2026, it has exploded past $39 trillion. The government has recently been adding new debt at a rate of over $7.5 billion per day. To central banks, who are the ultimate long-term planners, this is a five-alarm fire. They know there are only a few ways out of a debt trap this big. A direct default is unthinkable, and massive budget cuts are politically impossible. The only path left historically is to devalue the currency by printing more of it. This is a slow-motion devaluation, a hidden tax on anyone holding dollars. Imagine your savings are a glass of pure water. Every new dollar printed is like adding a drop of ink. The more ink you add, the murkier the water gets, until it's worthless. Central bankers see their dollar reserves being diluted, losing future purchasing power every single day. The data confirms their reaction. According to the IMF, the US dollar's share of global reserves has fallen from over 70% at the turn of the century to around 57% by late 2025. This isn't a sudden crash, but a steady erosion of dominance. The primary asset these banks are turning to is the one that can't be printed or diluted: gold. If the fear of debt was the kindling, a single geopolitical event in 2022 was the match that lit the fire. That year, the US and its allies froze Russia's foreign currency reserves. This sent a shockwave through every central bank in the world. Imagine you put your life savings in what you thought was the world's most secure vault. Then one day the bank manager decides he doesn't like your politics and changes the lock. Your money is still there, but you can never access it. That is precisely what happened to Russia's dollar and euro reserves. The fundamental promise of a reserve currency, that it is a safe, neutral asset you can always access, was broken. It proved the dollar was no longer just a tool for trade. It was a weapon of foreign policy. Suddenly, countries like China, India, and Saudi Arabia had to ask themselves a terrifying question: could our vault be locked next? De-dollarization went from a long-term theory to an urgent matter of national security. They needed an alternative, a reserve asset that is politically neutral and exists outside any single nation's control. An asset you hold in your own vault, not someone else's. There is only one asset in human history that fits that description: physical gold. Gold is the ultimate neutral asset. It carries no counterparty risk. This is why we see China on a relentless buying spree, with official reserves climbing month after month. It's why Poland explicitly states it is buying gold to enhance its national security. These countries aren't just buying a metal, they are buying financial sovereignty. When you combine the fear of currency devaluation with the scramble for politically neutral assets, you arrive at a fascinating conclusion. The world's central banks are preparing for a new monetary system. This is often called a great monetary reset. It isn't a single event, but a gradual transition away from the current dollar-centric system. For decades, the world has travelled on a single financial superhighway. Now that highway is congested with debt and prone to political roadblocks. So, the world's financial drivers, the central banks, are looking for a life raft. Gold is their all-terrain vehicle. History gives us a clear template. In 1971, President Nixon ended the dollar's convertibility to gold, switching the world to fiat money, backed only by faith in the government that issues it. It was like trading the deed to a house for an IOU. For decades, the world trusted the IOU. But what happens when the issuer of that IOU is also the world's biggest debtor? Faith erodes. Central banks, as the ultimate long-term planners, see this and are preparing for a future where a neutral asset may be needed to restore trust. All roads lead back to gold. This is why some analysts are putting price targets on gold of $4,000, $5,000 per ounce, or even higher. Their logic is simple. As trust in paper IOUs declines, the value of the one finite, universally trusted monetary asset must rise to fill the void. So, why should you care about US national debt and de-dollarization? How does it affect your savings and your family's future? The connection is direct. The same forces driving central banks to hoard gold are the same forces that silently erode your personal wealth. When a currency is devalued, it shows up in your life as rising prices. It's not that gas and groceries are suddenly more valuable. It's that the dollar you use to buy them is worth less. This is the invisible tax of currency debasement. Your savings account is like a bucket of water with a slow, silent leak. You may not see the hole, but you will eventually notice your purchasing power is disappearing. Think about what the central banks are doing. They are trading their paper assets, US dollars, for a real tangible asset, gold. They are trading a government's promise for a physical element that has preserved wealth for thousands of years. The question you must ask yourself is this: if the most informed financial institutions on earth are systematically selling paper promises to buy a hard asset, what should you be doing? This isn't about speculation, it's about wealth preservation. It's about protecting the value of your labor from the steady corrosion of currency debasement. The central banks are showing you their playbook. They are building a financial lifeboat while telling everyone else the ship is unsinkable. Watch what they do, not what they say. Their actions reveal a profound concern about the future of unbacked paper money. This is a crucial signal that owning a real tangible asset is no longer a fringe idea. It's the prudent step being taken by the very guardians of our financial system. By the way, if you find this analysis valuable for understanding these major economic shifts, be sure to subscribe and turn on notifications. We break down these complex topics every week to help you understand what's really happening behind the headlines. The historic gold accumulation we're witnessing is a direct response to a trifecta of systemic risks. First, the inescapable math of the debt cycle. With the US national debt over $39 trillion, central banks are hedging against the long-term devaluation of the world's primary reserve currency. Second, the new geopolitical reality. The weaponization of the dollar forced nations to seek a neutral, seizure-proof asset to guarantee their financial independence, and gold is the only asset that fits the bill. And third, the quiet preparation for what comes next. The collective action of these banks shows they are positioning for a transition to a new multipolar system, one where gold may once again be the anchor of trust. We are living through a quiet revolution in the global financial system. The record-breaking accumulation of gold is the clearest sign of this change. For those paying attention, the message is unmistakable. The era of unquestioned faith in paper money is ending, and a new era of real assets is dawning. Now, I want to turn it over to you. What do you believe is the endgame for this global gold rush? Is it a new gold standard, a digital currency backed by gold, or something else entirely? Let me know your thoughts in the comments below. I read everyone, and if you want to continue understanding the hidden forces shaping our financial future, make sure you subscribe. Thanks for watching.